Top 5 investments for 2021. Last year was an excellent year for the US stock market, and many companies and their share prices exploded. Now, 2021 shows a similar pattern and holds great opportunities for investors aiming to invest in different ETFs with a perfect balance of stocks from various industries. This article will give you in-depth details about the various ETFs, from stock ETFs to real estate ETFs to bond ETFs, which have profitable growth expectations in 2021. REITs. Firstly, real estate investment trusts, REITs, are a good place to start. REITs are publicly traded companies that give investors a chance to buy and hold shares in real estate portfolios that receive income from various properties. The portfolio consists of companies that own, develop, and manage residential, commercial, and industrial properties. The REITs represented by the Real Estate Select Sector SPDR ETF, XLRE, have underperformed over the last 12 months due to the pandemic. However, with the promising vaccination results and the news of economic activities restarting, REITs could jump back in 2021. The best place to invest your money is Brandywine Realty Trust, BDN, which has a price of $13.29. BDN is considered to be the best value REIT. Brandywine Trust primarily owns, leases, develops, and manages primary office properties, mostly located in Philadelphia. Secondly, you can invest your money in VC Properties Inc. VC, which is considered the fastest growing REIT and has a price tag of $27.64. VC own gaming, hospitality, and entertainment destinations. VC portfolio contains vast amounts of the gaming facility. Lastly, if you want a REIT with the most momentum, you can target Park Hotels and Resorts Inc. PK, which has a price tag of $21.87. Park Hotels and Resorts portfolio expands its exposure to 60 premium branded hotels that are located in the U.S. U.S. market ETFs. It is essential to look at the top performing U.S. market ETFs as the U.S. stock market is currently performing exceptionally well. Many analysts believe that 2021 will be a good year for the stock market. The most apparent ETF to invest in is the SPDR S&P 500 ETF. SPY is the largest ETF with an enormous amount of $330 billion in total assets and trades around 80 million shares each day. SPY eases the process of investing for investors, and the ETF allows you to get a chunk of each top-performing companies. Secondly, you can invest your money in Invesco QQQ ETF. The Nasdaq 100 index performed exceptionally well by rallying around 45%. The ETF consists of tech-savvy stocks such as Amazon and Microsoft Corp., which has a massive future potential. Lastly, you have Vanguard Information Technology ETF, VGT. As technology is booming, it is the perfect time to invest in an ETF that is dominated by technology. By investing in VGT, you will be exposed to more than 340 companies with high growth potential. International market ETFs. Emerging markets around the globe provide the investor an opportunity to diversify their investments and aim for a promising return. As the global economy is slowly recovering, it is the perfect time to invest in international market ETFs. Added to it, investing in international markets would be helpful too in case if the US stock market isn't performing well. The top-performing fund to invest in is Fidelity International Index Fund, FSPSX. This fund will allow you to expand your money across 20 developed countries. The fund invests in companies with a market capitalization of more than $10 billion, focusing on growth and value stocks. Secondly, you can aim for Vanguard Global Equity Fund, VHGEX. Vanguard Global Fund allows the investor to invest in various regional areas, and the fund holds more than 50% of its assets in the U.S. Since 1995, VHGEX has dominated its benchmark at 9.5% versus 7.5%. Lastly, another perfect place to invest your money is iShares MSCI Emerging Markets ETF, EEM. Analysts have predicted that this ETF has a high growth potential due to its exposure in emerging and developing economies, which will at some point outperform advanced economies. Bond market ETFs. For investors aiming for a less risky investment opportunity, the bond ETFs are the perfect place to start. They are funds that contain a basket of debt instruments that include both long and short duration bonds. The first place to invest is Direxion Daily 20+ Year Treasury Bull, TMF, which offers top performance in the bond sector. The fund aims to achieve high returns by replicating the ICE US Treasury 20+ Year Bond Index's performance. Secondly, you can invest in iShares Convertible Bonds, ICVT, which offers investors a convertible bond strategy that aims to track the holdings and return of the Bloomberg Barclays US Convertible Cash Pay Bond Index. The index's securities can be easily converted to cash or equity, making it less sensitive to interest rate changes. Lastly, you can invest in the SPDR Portfolio Long-Term Corporate Bond ETF, SPLB, which is issued by State Street SPDR. The ETF offers investors an investment option indexed to the Bloomberg Barclays Long US Corporate Index. TIPS ETFs that invest in U.S. Treasury inflation-protected security, TIPS, offer a convenient way for the investors to gain exposure to these government-guaranteed fixed-income instruments. TIPS are Treasury securities indexed to inflation, meaning that when inflation rises, so too does the principal amount of the security and the associated interest payments. With the Fed pumping money into the economy, the money must go somewhere. Thus, inflation or deflation can be an issue, and TIPS is a good investment if it occurs. You can invest in Quadratic Interest Rate Volatility and Inflation Hedge ETF, IVOL, which is primarily designed to hedge relative interest rate movements. It aims to profit from increases in fixed income volatility and steepening of the yield curve. Steepening yield curve mainly suggests that IVOL benefits from more robust economic activity and rising inflation expectations, leading to higher interest rates. You can pour your money into Flex Shares iBox 5-Year Target Duration TIPS Index Fund, TDTF. TDTF tracks the iBox 5-Year Target Duration Index, an index comprised of TIPS with an average duration of approximately 5 years. The fund can be used in various ways, from buy and hold strategy to tactical play to shift the allocation toward low-risk assets in anticipation of a sharp uptick in inflation. Lastly, one of the most promising TIPS ETFs of 2021 is Schwab US TIPS ETF, SCHP, which aims to track the Bloomberg Barclays US Treasury Inflation-Linked Bond Index, Series L. This is a broad index exposing to a large portion of the TIPS market. Moreover, SCHP is commonly given an increased weighting in a portfolio if investors are concerned about inflationary pressures. This is my list. Do you agree? Please let me know your thoughts. Don't forget to claim your free stocks down below using my links when you open a brokerage on Webull or Robinhood. If you are looking for a credit card for all credit levels, zero annual fees including zero foreign transaction fees, a high-yield savings, and a high cash back rate that you can have as a credit or have it deposit to your bank account, please apply to Discover via my referral link to get a $50 statement credit. Thanks for watching.